I welcome all our viewers who have joined across the country to this panel discussion, which is organized mainly on the banking sector, keeping in mind the bank audit season, which is going to start from in day or two. So all our practicing member must be eagerly waiting for the day when they can start the bank audit, and GST and Indirect Tax Committee thought that we should organize a program, and we have invited two of the faculties, CA Gaurav Gupta ji and CA Umesh Sharma ji. Both are well-known faculty in the country on the subject GST. Along with them, we also have with us CA Rajendra Kumar P, Vice Chairman to GST and Indirect Tax Committee, to support me in this program. As far as banking sector is concerned, none of the registered person, uh, leave himself from the impact of the GST on banking sector, because number of transactions they go through, and some are liable for GST, some are not liable for GST. And I was talking about the GST audit of the banks, and what will be the GST scenario for the banks, which we are going to discuss today. So this will be a panel discussion. We have drafted few questions, and I will pose these questions to both the panelists one by one, and we'll take the views of them. All our viewers are also allowed to write their questions in the box given on the screen. That you may write your queries. We will continue to scrutinize those queries and take up these queries to the panelists. Apart from this, some of the initiative of the GST and Indirect Tax Committee, I just want to communicate all of you. We will have more regular GST webinars organized by GST and Indirect Tax Committee. So all our viewers have now opportunity in this webinar also, in this same chat box. They can write the topics on which they want us to organize the webinars, the forthcoming webinars. More the request will come, it will help us in deciding, and it will be more useful for you. As our Vice Chairman is now visible on the screen, I welcome him also, and requesting him to say a few words and introduce both the speaker to all our viewers. Over to CA Rajendra Kumar P, Vice Chairman to this committee, and all our viewers. This face is very known figure for all of you. He served as a chairman for last 3 years. Now he is vice chairman again. So this ups and downs we do keep on doing. So over to CA Rajendra Kumar P for his remarks and the introduction of the speaker.
Thank you, esteemed chairman, the mentor of this committee, CA Sushil Kumar Goyal ji, the Honorable Central Council member and the former Vice Chairman of the committee, CA Umesh Sharma ji, very esteemed one of the panelists and one of the regular speakers on GST, and a person who holds a very eminent position in the GST canvas, Dr. Gaurav Gupta ji, and our GST committee secretariat and technical support IAS. It gives me immense pleasure to be back before all of you under the mentorship of CA Sushil Kumar Goyal, our Honorable Chairman. Esteemed friends, today is April 1. Let me greet each and every one of you, including our Honorable Chairman and all our panelists, a very happy, healthy, prosperous and growth-filled financial year 2024-25. CA Sushil Kumar Goyal, our Honorable Chairman, is a very visionary person, and under his dynamic leadership and stewardship, our committee is making giant leap and strides, not only in the GST procedural aspects, but also on the policy aspects. In fact, on the policy aspect, let me tell you, esteemed friends, that those are not visible to the naked eye to all of you. What we do on policy, what we do to influence the policy before the officials of GST, whether it's central GST or state GST, it's not visible. But let me be very candid that whatever issues are brought before us, wherever it requires a policy change, we effectively interact with the government with the support of Gaurav Gupta ji, Umesh Sharma ji, and scores of others who work for this committee with us. Esteemed friends, today's topic is relating to bank audit. And Umesh Sharma ji is a very seasoned Central Council member. I have had the opportunity of working with him as the chairman of the committee. He was the chairman when Sushil Goyal ji decided that he would work on the other streams of the other committees of the ICAI, and his expertise will be useful to those committees. Umesh Sharma ji was nominated as the vice chairman. Friends, he is one person who breathes GST 24/7. His writings in the Lokmat newspaper in Maharashtra are very, very popular. He links the GST with the spirituality. Spirituality and GST are wedded by CA Umesh Sharma, who is the Pandit, I can say, of this particular wedding, which he does along in spirituality and GST. Esteemed friends, a bright future awaits Umesh Sharma, not only in the council, but also in professional fora. Thank you, Umesh Bhai, for being with us, and very eminent to know that you are here today as a panelist. Dr. Gaurav Gupta. I have known him for now about 5 years or so. Whenever we have a topic which requires a subtle exposition, which requires a delicate handling, we immediately fall back on Dr. Gaurav Gupta. A person of immense repute, a person whose views are candid, a person who is always available for the GST committee of ICAI, a person who practices from headquarters of the country, New Delhi, capital city of New Delhi. CA Gaurav Gupta is there for us at all times. Sir, your being here itself is a great support.
Sir, with your leadership, it has always been a pleasure to serve.
You are a Gaurav of this committee, let me tell you. You are a Gaurav of this committee, and thank you very much for being with us. This particular topic is certainly going to be immensely beneficial. Sushil Goyal has left no stone unturned to ensure that we have a good audience. I'm told there are about 1,000 to 1,500 members who have joined today for this most important program, the panel discussion. Thank you very much, Sushil Bhai. Thank you very much, panelists, and thank you, office, for weaving this seminars and also for weaving this webcast together, and more to come on a weekly basis under the dynamic leadership of Sushil Goyal. Thank you very much. Sir, you're on mute, Sushil Bhai. You're on mute.
Thank you, Rajendra ji, for introducing both the speakers. And now we are moving with the questions which we already framed. And again, I remind all our viewers, they may ask query related to today's topic. And if they have any other topic in mind, they may request for a particular webinar for that. Because if you ask queries not related to GST, today's topic, that is GST related to banking, we will not able to take up that query today. My apology in advance to all the viewers. So please do not ask queries which is not directly related to today's topic. First query, which is drafted by us, now I will ask Gaurav Gupta ji. Gaurav Gupta ji, basically, what are the special provisions under GST law with respect to issue of invoices? Because as I understand, GST laws are not similar to other other taxable service providers, which is they have some special provisions made for the banking sector, be it invoicing, be it credit provisions. So one by one we will take up. So Gaurav, first let me please throw some light. What are the special provisions for issue of invoices by the banks?
So, uh, so as we all know that invoicing is a very sacrosanct function in GST, and every taxable person is required to issue invoices which are serially numbered, and they are issued in a particular year in a particular serial. In case of a banking company, a specific relaxation has been provided by the statute, and under Rule 54, Sub Rule 2, where a banking company is required to issue the invoices, two relaxations have been given to it. Number one, it can issue a consolidated tax invoice for the entire services which are given during a month to a particular buyer at the end of the month, which is not there for any other supplier. And number two, the invoices may be given physically or electronically, whether or not they are serially numbered. So the serial number relaxation has also been given. So these two relaxations have been given to a banking company in case of invoicing, and therefore the banking company may issue a consolidated invoice, and the serial number may also not be there on that particular invoice. But yes, having said so, while the relaxation has been there in terms of serial number, a proper identification number on that particular document is a prerequisite under the rule. So that identification number should be there. So when the buyer is taking or the banker is issuing a particular consolidated invoice, a serial identification number may not be in a particular serial, but an identification number should be there on that particular document. One more relaxation, sir, before I pause this particular question. The signature or the digital signature of the supplier is also not required in case of issuance of a consolidated tax invoice or a document in lieu thereof, which is mandatory under all other invoices under the Act. So these three relaxation we can find has been given to a banking company.
You, Gauravji, can you throw some light on this reporting under GSTR1, whether they have some different provision or it is normal provision to report in GSTR1?
Sir, if we look into the requirement of reporting the serial number, which is in table 13, any taxable person need to report the outward supply invoices detail, inward from unregistered person, revised debit note, credit note, receipt invoice, payment invoice, refund voucher, delivery challan, all these 7 category of documents which a person can issue under GST, they have to report the serial number of all those particular documents in table number 13. Now, very surprisingly, while there is no specific relaxation which has been provided to a banking company, this particular issue has been taken up in frequently asked question issued by the government, and therein they have mentioned that it is very important, or it is required that the banking company should also report that identification number, the unique identification number in the table number 13. Yes, for column number 3 and 4. Column number 3 and 4 is about revised invoice and debit note. Relaxations have been given. But apart from that, there is no relaxation which has been provided by the statute per se to the banking company. Having said so, I am also aware of the fact that it is very impossible situation that when the serial number requirement is not there, the limitation in terms of table 13, which is there on GSTN, the banking company may not be able to report all the identification numbers, which may not be a serial number in table number 13. So when all our colleagues, when they are going for an audit and they don't find table number 13 duly reported, that might be a bit of a concern. But having said so, if there is a system to intimate the government, and more particularly in the era when e-invoices have been issued, So now those particular things, when they are required to issue those particular invoices, in those particular cases, that table number 13 may not be of much a concern to them. But apart from that, they may refer to question number 6 of the frequently asked question on the banking sector.
Thank you, Gauravji, for elaborating the subject, and definitely viewer will be benefited by this. Umeshji, you want to add on something or anything you want to supplement on this topic, then you are welcome.
No, sir. Gaurav sir has covered all the aspects.
Thank you. So we are getting a confirmation from Umeshji that Gaurav sir has done the complete work which is assigned to him. Thank you, Umeshji. Now, I just want to know the reverse charge, the input services, reverse charge on input services in case of banking, because it is specifically, we know that there are 20-25 services which are under reverse charge, but few are specific to bank, where banks are only liable to pay under reverse charge. Banking or the non-banking financial companies, they were only under reverse charge. So what is those services, if you throw light on this, and what type of precaution the auditor should take care?
Yes. Thank you, Sushil sir. Thank you, Rajendra sir. And it's a very happy moment when our co-pilot, co-partner is Gaurav sir. I remember that last year also we started the first webinar series with Gaurav sir, and today it's the 1st April for this financial year again with Gaurav sir. Uh, and as regard the topic and the question which has been given to me, yes, friends, GST and banking, it's a very complex subject. But as an auditor, whenever you go for a bank audit, you have to look into all the aspects, and GST is the one of the aspect. And the question is relating to the reverse charge specific entries related to the banking sector. So friends, in banking, there are different type of services which are taken by the bank and which are also provided by the bank. So in GST, first important service that a banker needs to take care under reverse charge is the advocate or firm of advocate by way of legal services, because banks provide loans, they do the scrutiny, they also get the title verified of the immobile property, and there are also few issues related to advances. So there are debt recovery tribunals, etc. services from the advocates. So reverse charge mechanism for advocates is one of the prominent service. Then another specific is related to services supplied by an arbitral tribunal to a business entity. So many times bank go for arbitral tribunal. If the services are provided by them, then it will be covered under reverse charge. Another important third services comes is the services supplied by a recovery agent. Yes, friends, many times bank appoints a recovery agent to recover the sum, and a commission or fees is paid to the recovery agent. In that case, it is covered under reverse charge. The bank has to pay. Then another fourth services is the direct selling agent, which is popularly called a DSA. Like a Tata Motor dealership is there, they are having tie-up with SBI. So direct selling agents are appointed, and they also process the loans, advances. Few NBFCs also do that. So in that case, if any commission or fees is given to the direct selling agent, then the bank has to pay it under reverse charge. Then fifth services come is the business facilitator. Now, what is this concept? In the rural banking, in many of the areas where there are no branches, banks appoints business facilitator who helps in opening of the bank account or some of the primary transactions it provides. So in that case also it is covered under reverse charge. So other normal reverse charge like rent of the government immobile property or say security services, these are 3 4 important services like recovery agent, direct selling agent, and business facilitator services where reverse charge is payable by the bank on the particular transaction. So these were the services which were related to the banking sector. Yeah, Sushil sir.
Thank you, Umeshji. Gaurav sir, you want to add something in reverse charge, because reverse charge is the area where the officer always finds some liability to be paid, because when they do not find that something to be paid in forward charge, so they jump upon the expenditures list of the expenditure and say bring out something from the expenditure list and try to collect the taxes under reverse charge. So anything you want to add here, Gaurav sir?
Sir, I have, I can add any new service to it because everything which is there in notification number 13 has been covered by Umesh sir. And it is indeed the way he has presented that advocate piece. I was very, very happy to hear because this is something which is a very crucial piece. The quantum and the nature of advocate services which are provided to a bank, it is not very easy to find because you might also find that they are taken as a reimbursement from the clients. Now the problem is, I have, as a bank, I have appointed an advocate for a particular CC verification for whatever purpose, the property or any stock or whatever. I have taken that particular amount also as a charge from a client. So whether if it is paid or as a reimbursement from the client of the bank, in that particular case, is there any netting which is happening? And whose privity was to pay to the advocate? These particular questions also, what Umesh sir has just highlighted, I'm drawing everybody's attention to that. These are very crucial questions. So please look into that. Advocate piece, as we have just spoken, is the most sensitive piece in the banking industry. All other aspects you might be finding very apparently in the P&L of the bank. But this one piece you have to take care and take a complete disclosure in terms of the amount of fees paid and the amount of GST which has been recovered. Just to add, Umesh sir, FOA 194J also, this advocate piece can be correlated. So there are a lot of things which a bank auditor might need to work on in terms of RCM, and as Chairman as sir has said, it is one piece which always has been looked forward by the tax authorities, that definitely there will be a default in case of any big entity. Please, sir.
Thank you, Gauravji, for adding the value to the topic. Now I want to touch upon the topic, and I'm going to Gauravji only. Gauravji, there is always a dispute between the cross charge and the input service distributor. And the Finance Act 2024 specifically made some amendment, although not notified so far. And they made it mandatory for input service distributor registration. And there is always a dispute. What is the cross charge? What is the direct supply? There may be a supply which is considered as a direct supply, not a cross charge or not a ISD. And ISD, we all remember that ISD covers only service area. So this is basically 3 segment of the banks, and banks is largely using these particular things because they have good number of branches, good number of registrations, and getting services from a particular location and transferring to other location, or one unit providing services to others, and their furnitures are getting transferred. Sometimes they procured the furniture or the equipments at one location and distributed to many locations. So how this is a big area to be looked after. So I'm asking you, Gauravji, please throw light on this and how the auditors should take care of this, because it is not only the furnitures are getting transferred by the head office or the one of the branches. Sometimes the employees who getting transferred from one branch to another branch, they are carrying furniture along with them, or even the laptop, a laptop which is given to a manager to in X branch and he is now transferred to the Y branch. How this laptop to be accounted for, what are the transactions to be recorded in the books of accounts, and ultimately we want to know what will be the GST impact. Please, over to you, Gaurav.
Sir, as rightly said by you, the three terms, and I'm just adding to one more term. So when we are saying supply, cross charge, and ISD, these are three different terms. Uh, Umesh sir, forgive me, credit के बारे में, in terms of credit also, Umesh sir is a better person to speak on or add value on the credit part of the banking side. But I'm adding to the output side, and then I'll request Umesh sir to add on the credit piece. In terms of the output, supply, cross charge, and ISD are three different terms. Supply, as we all understand, when there is a requirement or when there is a calling for one particular service or goods by one particular person from another, that is a supply. Cross charge is basically the attribution of the common cost between the beneficiaries. While the consumption has happened at the top branch or maybe the head office or a regional office, zonal office, but the beneficiary or the benefit has flown to many branches under that particular head office or zonal office or regional office, that particular attribution may be put into the scope of a cross charge. And last is input service distribution. Input service distribution happens when, and input service distribution only happens for services. It does not happen for goods. So input service distribution happens when the invoice is received at a branch which is different from the branch where the services has been consumed. So it is basically the invoice has gone to a different branch. It is rerouted to that particular branch which has consumed the services. It is not an attribution or distribution. It is basically a diversion of the invoice to the correct branch. Now, these particular three terms, as we know, may sound technical, but when we come to the practical applications, we find that many of the banks or many of the entities, they are using these interchangeably. Now, let me first put supply as one-to-one example. When we give a first example of supply, I'll take a very simple example where supply will definitely fit into, which is a movement of an ATM from one branch to another, having different GSTN. So if I am one branch which is located in, let us say, Mumbai, and I am now a branch which is in Pune, the Pune branch has received a ATM from the Mumbai branch, and both the branches, I am presuming, has different GSTN. And it's a very simple example. So in this particular case, a tax invoice will be issued for supply of an ATM from one branch to another. While I'm speaking on the supply between branches, I'm also apprehensive of the fact that someone may definitely be of the view that supply between branches cannot be taxed under CGST Act. Sir, we keep that particular academic discussion on one particular side for a moment, because we are not right now examining the constitutional aspects of the term supply. So believing that under Section 7, read with Schedule 1, in case where no consideration is there, and between distinct person as defined under Section 25 and Section 8 of CGST and IGST Act respectively, any supply from one branch to another branch under different GSTN will constitute a supply. So there, the most important example will be ATMs, or for that matter, other assets, sharing of the licenses. A lot of licenses are there in the banking industry where softwares are required. Another example, which is more very prominent, is you may find gold, because most of the banking companies, they also will be trading in gold. So that particular example you also have to keep in mind. Apart from that, yes, as Chairman sir has just mentioned, the movement of the employee fixed assets. that will also constitute a supply, because along with the employees, the assets which are basically located at the residential premises. Now, this is a very, very tough kind of a situation for any banking industry, because they don't take input tax credit of that particular assets which are located at the residence, because that gets blocked under Section 17, subsection 5, clause H. You can't take the ITC, but when you're moving it, then definitely a challenge in terms of raising an invoice of those particular assets come into picture. So uh, I am of the opinion, when you are taking or purchasing a asset for the residential premises, why you should not outrightly reverse that particular ITC. You should do it over a period of time. And when you are transferring that particular asset to another GSTN of your company, in that particular case, the ITC, which is proratedly available, may be transferred without any loss to that particular branch, to the receiving branch. This was supply. Cross charge. Cross charge you will find more in terms of the regional offices, zonal offices. They are consuming. Mind my words, my dear friends, I'm saying consuming. A head office will receive the services of a tax consultant. The head office will receive the services of a banking expert. It may receive from foreign consultants. All these services are consumed, but the benefit which is taken is distributed all across the zone or region, or for that matter, the national branches of that particular banking company. In that particular case, you have to make a very judgmental, or I would say reasonable approach to distribute this particular expense across all branches. Please also do remember that it has been clarified by the government that salaries do need not be distributed. So that particular aspect can also be taken care, because when you're doing a cross charge, now so this is a confusion which government itself has created when they are saying the entire cost of that particular operation of that particular branch, which is serving multiple branches, should be distributed. The cost towards salaries are to be excluded. Now, this kind of a selective approach without any distinguishment in the act is very, very tough to explain and take a call by any person. But yes, in a very simple term, distribute all the cost of that particular branch except salaries on a very safe side, and the receiving branch take the input tax credit. And again, I'll go to Umesh for that input tax credit piece. Now, the last part, ISD. ISD, very simple example. Again, I'll take security guard services taken by 65 branches having different GSTN. The invoice, a single invoice is being received at a regional office. Now that regional office is basically receiving an invoice where services are consumed at those 65 locations. Unlike the cross charge where the services of the consultant was received at the regional office, here the security guard is standing at the branch. So the consumption of services happened at the branch, but the invoice of all the branches have been received at a regional office. In this particular case, ISD can be opted. So please make a very clear distinction between these three terms: supply, cross charge, and ISD in any entity, and more particularly banking. Also, please appreciate there is something called a concept of home branch. Every account is linked to home branch. However, in this particular era, when we are talking about CBS, which is central banking system, any person can go to any branch of any of the bank, and maybe there is code sharing between different banks also. So I might, as a consumer of ICICI, go to Bandhan Bank, go to ATM and withdraw money. Now I am a ICICI customer located at a Gurgaon, and also that sector may be sector 5 branch. Such one branch customer can travel across India and take services from any of the branches under CBS. It is a very complicated kind of a structure, because all those other branches which are serving the customer of one home branch are basically providing services to that particular home branch. How this will be addressed, it's a very complicated question today. I don't to my humble knowledge, no bank has per se regulated this particular kind of a scenario where so many cross charges are happening across India. So this one aspect is still, I would say, unanswered. You will find a similar situation in case of a telecom company. Telecom company also, the customer is located in one state, but today you can travel across India and you might be using the services in terms of air, the tower which is located in Karnataka. So I'm coming from Delhi to Karnataka. The airwave I'm using in Karnataka, the Karnataka GSTN will bill to Delhi GSTN. So that particular complexity has been addressed by telecom company, but to my humble knowledge, the banking companies are yet to address. And when they will address, it is very, very complicated a scenario. For the very simple reason, the customers, the number of transactions are huge. From a very simple transaction of withdrawing amount from an ATM to as complicated as going to another branch for getting the passbook updated, or for that matter, simple, let's say a DD making a DD, even the cash deposits, cash withdrawal, everything can happen across India. But everything which is given to a person which is of a different branch, having a different GSTN, means a supply to a distinct person. So that kind of cross charge or that kind of supply charge, I while I'm apprehensive that that is not answered by the banking company as of now, but yes, that question remains open in GST.
I think it is a detailed topic discussion done by Gauravji, and I won't think Umeshji can say that I have nothing to add here, because this cross charge and cross charge always a topic to be argued and discuss, cross charge as well as the ISD. Now, government is also very serious about this ISD topic. And, the amendment has been made in the Act even, that what is cross charge should be cross charge, what is ISD should be ISD. It is not a cross connection, and what is ISD cannot be considered as cross charge, or cannot be liability cannot be discharged by considering its ISD. So what exactly difference between the Umeshji, even if the cost of repetition, please tell the viewers what exactly cross charge and what exactly the ISD should be, if you want to add here.
Frankly speaking, sir, Gaurav sir has deliberately dealt with the topic, and as you said, cross charge and ISD are such a area. And Gaurav sir has already given an example of telecom company and banking company, and there are multiple branches, regional offices, zonal offices, head offices. So the issue of cross charge and ISD is a very typical issue for banking, and even banking sector is not able to justify many things after the recent amendment also made for ISD compulsory registration. So I think according to the discussion, it is well settled and very clear from Gaurav sir discussion what is cross charge and what is ISD. The crux of that matter is the consumption of the services. So sir has already given the example. I think uh, that should be a guiding force for all of us, sir.
Thank you. Thank you, Umeshji, for expert opinion, I should say. Umeshji, now we want to move regarding the input service. Not input service, it is input tax credit which is available to bank. Usually we understand that bank are eligible for 50%. Some of the chartered accountant was asking what is beneficial, whether 50% is beneficial, or I should go by the proportionate rule, 40 rule, applying rule 42 and rule 43. And please also specify, if I am paying tax under 50% provision, which is applicable to banking and financial companies or banks, whether this rule 42, 43 in case of capital goods will going to impact me, or it is not, it is taken care by this 50%.
Yeah.
So over to Messi for the input.
Yes, sir.
Service distributor. And in the meantime, let me report to all of you, all the viewers, that we are having 2,100 viewers login at present, and definitely it is credit goes to both the speakers. Due to them, this the huge number of participants are joined today. Over to Ms. Jina.
Yes, sir. Thank
Well,
you.
I just want to say credit goes to the sitting two presidents and three vice presidents of the committee. So I think this is your leadership that when you're keeping any program of indirect tax committee, Sushil sir, Rajendra sir, Umesh sir, I think the entire fraternity understands the relevance and importance and definitely the content of that particular seminar. Sir, please.
Yeah. Rajendra sir, you want to add something?
No, sir. By keeping silent, I'm not disturbing anyone. So I'm just listening to both of you. Very nice.
Okay.
Please continue.
So Rajendra sir moving from one branch to another branch of bank. Okay. So let's focus.
I don't do bank audits. Rather, I don't do audits. Let me be very clear. Thank you.
So as regard the input tax credit, it's a very typical treatment for banking and financial institutions as regarding the apportionment of credit and the utilization of credit. Section 17, subsection 4 covered that specific entry, which deals with the banking, non-banking, and financial institutions. And yes, they have two options. One option, either they comply the complete set of input tax credit, section 16, 17, 18, 42, 43, 44 rule, or they go for just on monthly basis. This is very important. They go on monthly basis, an option that an amount equal to 50% of the eligible input tax credit on inputs, one more item, capital goods and input services. So all these three, they are eligible for the 50% of credit for that month. And very important, the rest ITC is lapse as per rule 38. So the first question that whether this option first, that is taking ITC, calculating the exempt turnover, taxable turnover, proportionately taking, or taking 50% directly on monthly basis, which option is better? Looking toward the complex situation, number of branches, regions, head office, state-wise GST registrations, maximum banks are going for the 50% option. So that is the majority of the option which are been taken by the banks. Very important point, once the option is exercised, it cannot be withdrawn in between the financial year. And most important part is that if the second option, that is 50% option, is taken, then it shall not apply to the taxes paid on supplies by one registered person to another registered person having same PAN number. So what Gaurav sir has already given an example here, same PAN number is there, one registered person to another registered person. Say a bank having branch in Maharashtra, another having a branch in Gujarat. So from Maharashtra to Gujarat, cross charge is there, or say ISD is there, then it is a tax paid on the supplies from one registered person to another registered person having same PAN number. So inter bank transaction between one branch to the another branch, this 50% option is not to be applied. So what is the impact is that they are eligible for 100% credit of that transaction between the two registered person having the same PAN number. So this is very important observation one has to keep in mind. And when we go for the rule, section 30, rule 38, the banking and financial institution has to calculate this amount on monthly basis, and most important, the rest of amount is lapse. Means what? Bank should take 100% credit and reverse the balance credit. So that is very important, because nowadays the state governments are worried that they are not getting their share of ITC. So they want that whatever amount is there in 2B, you put it into 3B on gross basis, you reverse and take the balance 50%. So this is very important observation here on the banking part, that they should show it as a gross, and rest of amount is lapse. So this is the discussion, and very important part, that in banking sector, branches also take some services, regional offices within that state also take services, and the return are filed at a single location. So they merge all the ITC, and then they take the 50% of ITC. And whenever they take the 50% of ITC, they have to do it on monthly basis, and rest they have to expenses off. So this is the specific provision related to input tax credit for banking. Sushil sir.
Thank you, Umesh Bhai, for this input service provisions you have discussed. Gaurav ji, you want to add something here? Something
No, sir.
supplement?
I think
No supplement to
all
be-
points, sir. All points are
Okay. Thank you. This input service, sorry, not input service, this input credit, which is the banks are taking. Definitely, you have mentioned that the 100% credit is allowed in case of inter-branch transactions. They're not required to take the 50% credit. 100% credit will be available to them. So now I'm taking a topic which is one of the two or three persons want to know, because this audit fees which they are chartered accountants getting from the banks, whether these are subject to TDS and what are the TDS provisions applicable for bank under GST. So Gaurav ji, over to Gaurav ji for this TDS discussion that is under section 52 of the CGST Act. What are these, and whether chartered accountants are also subject to this TDS provision? Over to Gaurav.
Sir, section 51, the tax deduction at source, it is basically applicable on all the entities which are basically the government entities. And very interestingly, when we speak about the banking industry, there are many banks which fall within the purview of this particular section. So any such particular person need to deduct a tax at the rate of 1% from the payment made or credited to the supplier of goods or services where the total value exceed 2,50,000 rupees. So not all the chartered accountants will fall, number one, only whose fees will be greater than 2,50,000. And if I'm not wrong, my dear friends, though I'm not into bank audits, but most of my friends, even when they're doing 2 branch audit, this fees will exceed 2,50,000 rupees. In my humble opinion, when it is all public sector and banks, they are supposed to deduct this 1% TDS from their fees. Umesh sir, your views on this?
Yes, it's correct, sir, that the public sector undertakings, so the nationalized banks, they have to deduct TDS.
Good.
And we are talking about, so we are talking about GST TDS, not income tax TDS.
Yeah, it
That
just
will be all the learned members. Please understand, we are not talking about the 10% will be extra. This 1% is in addition to that 10%. So a lot of TDS for you.
Gaurav ji, I want you, since you have taken this TDS on this is so we can summarize it. The chartered accountant who is conducting audit for banks, from their fees, the bank will deduct the TDS as per income tax. they will deduct TDS from income tax, GST Act also. So how to get refund of this TDS which is deducted under GST Act, and what will be the implications? Because maybe few of the chartered accountants are not aware about this, because if they are not working for the contractors of the government. So please elaborate this also, Gauravji.
There is no need to basically take a refund. What Chairman sir just mentioned. सुशील सर ने कहा कि इसका बेनिफिट हमें कैसे मिलेगा. The benefit will flow by way of taking this credit in our electronic credit ledger, by accepting all the items which will be appearing on the portal of the recipient, that whether these particular TDS which are appearing before you belongs to you or not. And for a particular month, you have to accept the TDS of a particular month together. So maybe there are, if you worked for one particular bank only, so you will find only one entry appearing in your monthly TDS. And when you accept, that particular amount will go to your electronic cash ledger. And when you will be filing your return, you may take that particular amount, or you may use it towards your output tax liability, or in whatever manner you want. Secondly, the amount will not be available, as I understand, in the same month when you will be raising your invoice. The bank may deduct the TDS in the subsequent month. So don't wait to file your return on account of TDS. You may use that particular TDS in your subsequent month's output liability. For that particular month, if TDS is not available, kindly pay the amount by using your cash or credit ledger, whatever is available. So these two are two independent activities which you have to take care. Simply accept those particular transactions if they belong to you. The amount will get credited to your cash ledger, and use that particular amount to pay any of your output tax liability in any of these subsequent months. Sir.
Thank you, Gauravji. It is very simple. Gauravji has mentioned that it will come to my. I have to accept it, whether this, because sometimes it may wrongly filed by the person who has deducted. It may not belong to you, then please do not accept it. If it is belong to you, then only you should accept. Otherwise, notices will come and the interest and everything will come. And if you accept, it is a cash balance. And if you are liability coming time, you may adjust. Otherwise, the refund provision is also very simple. If any balance in the cash ledger can be claimed as refund any point of time. Now, I want to touch upon the interest portion. Umeshji, basically, we understand interest is not taxable. But whether it is so simple, whether interest is not taxable, because it reminds me about the section 15, which is talk about the valuation, section 15(2), which says that interest on delay payment of consideration is liable to GST. And I also understand there are different provisions for the interest in case of delay payment of credit card liabilities. So please cover this, whether what type of interest are exempt, where the bank should not pay tax, and what are these credit card interest or interest for delay payment of consideration. So please elaborate this topic for the help of our viewers.
Yeah, for the banking industry, it is very much clear that their main source of income is interest, and that comes from the advances which they are given to the lenders. So at the one side, there is a interest on deposit, which is a expense, and at another side, there is a interest on advances. And there is a specific schedule entry where exemption is given to the banking industry, that the interest is an exempt income, or it's an exempt service. So the definition of interest is very important here, and the interest means interest payable in any manner in respect of any money borrowed or debt incurred including a deposit claim or any other similar right or obligation, but not include any service fees or any charge in respect of the money borrowed or debt incurred or in respect of any credit facility which has not been utilized. So friends, this is very important that the schedule entry specifies the definition of the interest and the tax rate is nil. But when it is nil, it is pertaining to the deposits, loans, and advances. And the consideration is represented by way of interest. If, and very important, other than interest on credit card services. So here, what I want to suggest, if the interest is linked to advances are given, the consideration for advances is interest, then it is exempt. But if interest is charged for credit card services, then it is taxable. Further, very important analysis comes here is that if any service fees is charged, if any other nomenclature is used where there is a service given to the borrower, then it will be a taxable. But if it is a part of interest, then it will not be taxable. A interesting AR was there of Bajaj Finance Limited, where the case was that there was a delayed payment, so penal interest was also charged. So the debate arose that whether SAC 9971, that is relating to the interest, whether it covered that or not. And the AR authority at the first level has said that penal interest is taxable under GST. But Bajaj Finance Limited went into triple AR, means appellate. They challenged that. And the triple AR authority, appellate authority has came out that interest in any manner, the definition is interest payable in any manner will include penal interest also. So the penal interest is also exempt and interest is also exempt. Now we come down to section 15. Section 15 says that if there is any delayed payment, the interest become the part of value of supply. But in case of banking, the exemption entry is very clear. Interest means interest payable in any manner in respect of the money borrowed. So it may be a interest normal or it may be a penal interest. But if any service fees is there, any charges are collected from that borrower, or any amount relating to interest on credit card services, it will be a taxable amount. And one has to be very clear whenever we go for an audit of a bank, please check the miscellaneous income, other revenue income, and also test check the interest ledger, whether anything other than interest is also there or not. So because interest is exempt, but other than interest, any revenue is there, it will go under taxable services for banking. Over to you, Sushil sir.
Thank you, Umesh ji, for touching a very relevant topic, that is the interest on which the bank is entirely dependent. Gaurav ji, you want to add something here? Interest,
No, sir. I
penal
think
interest.
all kind of I think the summary remains what Umesh sir has just mentioned, that if it is in the nature of interest towards the lending activity, giving money, using money, exempt. If it is an interest in terms of any penal nature for delayed payments or something like that, it is more of a service fee charge which has been taken by the bank. So those particular terms we have to be very clear. Use of money, interest, exempt. Other interest, it is only a nomenclature, taxable.
Thank you, Gauravji. Now, Gauravji, I'm not taking new questions from my side. Good number of questions has come on the TDS area, which you have taken the topic. So people want to know if I am unregistered because my total turnover is less than 20 lakh and I have not taken GST registration, not charged GST on my invoice, whether I am still subject to TDS and what are the provision will be applicable for me to TDS, what is the rate of TDS, or TDS when to be deducted, whether it will be deducted on the basis of provision of fees made by the bank or it is on payment basis. Or please, sir, these few points, I think repetition is required for the number of questions are coming on this.
Sir, no problem. I'll try to summarize the queries in one go. See, sir, number one, whether the supplier, whether he is registered or unregistered, the taxability in terms of deduction is no different. It is not restricted to a registered supplier. The section is very clear. Section keeps it open that when it is a supply which is more than 2,50,000 to any supplier, TDS need to be deducted. Number two, it need to be deducted at the rate of 1% from the payment made or credited to the supplier. So it is the time of payment when this particular TDS will be. That's why I was mentioning that there will be a difference in terms of timing of invoicing and the TDS. So you have to be very clear that banks will only deduct TDS at the time of making payment to the supplier. And number three, the payment made should be of the taxable goods or services, not of the tax. So payment of the taxable goods or services will mean that GST amount will not be subject to TDS. It will be the value of services which will be subjected to TDS. So I hope the three questions which are being asked by the learned has been answered, sir.
Gaurav sir, we want to know how to handle when I am unregistered and they have deducted my TDS. How to handle, how I will get the adjustment because I have no GST liability. How it will be refunded to make, get the refund. If you can elaborate on this.
Sir, also I'll highlight one more thing that no deduction is required if the location of the supplier and place of supply are in different states. So if the branch and the auditor are in different, then TDS provisions will not be applicable. I think that will take care of the problem of many of the auditors. Number two, in case when the TDS is deducted, if you are not registered, then definitely this one amount will definitely pose a challenge because there will be a lot of effort in terms of taking the refund from the government. I understand there can be a secondary view of non-deduction, but in my humble opinion, I'll stick to my view of the requirement of deduction, and the person will have to, the unregistered person will have to apply for refund from that particular jurisdiction.
Yes, sir, now it is a controversial issue. Gaurav sir is saying we have to deduct TDS from unregistered person also. We have to means the bank has to deduct. And another query came in between that whether concurrent auditor are also liable for this TDS. So I want answer from Umeshji. You concur with the view that it is to be deducted. I concur with the Gauravji that TDS to be deducted because they have not specifically mentioned that it is to be deducted in the registered person. Definitely, Gauravji has mentioned correctly that if the supplier and the receiver of supply is in two different states, then this provision is not applicable.
Yeah, it is very interesting and it is very a typical issue. Unregistered person, TDS, and then refund. In that case, as a banker will deduct TDS because the responsibility casted on the banker is that the supplier providing any taxable goods or services. So yes, it's a taxable goods and services, and 2,50,000 lakh and above amount has gone, so it will deduct TDS. And as regard the refund need to be taken by the unregistered person also. And there was a one clarification for the builders and developers, Gaurav sir. When there is a cancellation of the transaction, and if any tax is already paid and the builders uh, has already paid to the government, then the unregistered person who is a flat owner can get the refund of that amount. So in that line, even though there is unregistered person, he can get refund of TDS which has been paid by the banker. So in that line, I think our discussion is in way where we are discussing all the three.
I'll just
Sir.
highlight one more thing, because the confusions in this particular area, sir, is as Chairman sir has just mentioned. This particular topic is of a lot of confusion and discussion because of two things. On a conjoint reading of Section 51, when you do with the Rule 66, a person may come out with an opinion that TDS is not required to be deducted in case of a unregistered person. And the similar clarification has been provided by the GST Council in their SOP, which was released on 28th November 2018. I have that date just mentioned in my notes. Again, there also a payment to an unregistered person is mentioned where TDS is not required. But while I am putting both the aspects, Rule 66, which is about the return filing, and the SOP, the benefit in terms of giving an exemption has not been extended by the government. So it will be safe for the bank to deduct TDS, and in the return, the option to mention the name of the person whose TDS is deducted is available. So again, sir, I'll go with my view that in my humble view, TDS should be deducted.
Okay, we accept this as of now. If some other views are coming by the viewers, they may post it on the chat box, which is available to them. So, because it is impacting number of chartered accountants, that's why we are elaborating this topic and discussing in detail. But as Umesh sir has specifically mentioned, that refund claim can be filed by unregistered person also. There is no restriction on that, and that is also recognized by the Government of India. So now, after discussing TDS, I want to move little away from the TDS. Now, what are the mandatory documents banks are required? Gaurav sir, I want you to handle this topic. What are the mandatory documents that are required to be maintained by bank or financial institutions? And also about the fixed asset register, because other documents, if the auditor is not seeing it, is okay, but the fixed asset register, with the viewpoint of GST, what you want to guide the all our viewers at this point of time, please. Over to Gaurav sir on the topic of documentation, and as well as including the fixed asset register. And we have touched 2,500 participants, a piece of information to all those. Thank you.
So in terms of the record maintenance, one has to refer to Section 35, read with Rule 56. The accounts which are to be required to be maintained, the relaxation in terms of invoicing, we have already discussed. I'm not reiterating that. But the other documents which are required to be maintained remain same for a banking company. Very particularly when you have pointed out the fixed asset register, sir, I understand where the question is flowing from. The question flows from two major aspects, that there is a lot of movement of assets between the branches, and therefore the FAR which is maintained by a branch, and there we have seen the instances where asset may be parked at a particular branch, but physically it may be allocated or attributed, or it has moved to another particular branch. So FAR in terms of physical assets being available and the ITC of that asset also flowing with that asset is very, very important. So when you are examining the FAR, please also look that particular ITC of that FAR moves with that particular asset. So that is one simple thing. So if asset is not there in your FAR, the ITC register should not display that particular the input tax credit of that particular asset. And secondly, if the assets are going out from a branch, suitable tax invoices are raised by the branch to other branches in terms of the supply of the assets being made. In terms of other records, yes, the supply received, the supply given. ITC records will be very, very important to be maintained because apart from the 50% deduction, what Umesh sir has said, please appreciate one thing, dear friends, that 17.5 is also a very crucial aspect to be examined in your ITC register. What has gone for the personal consumption of the banking employees, for example, their allocation of the assets. Now, again, these are very litigative issues, whether relocation of an employee will be considered as a personal expense or for that matter, an official expense. Whether services provided at the guest houses, where there is a temporary stay of the employees who might be joining at that particular branch, will it be considered as a personal expense or official expense? Similarly, in terms of n number of allowances which they get in terms of purchasing uniform, etc., when they are billed to the banking branch, whether these will be considered as a disallowed credit or not. So those particular aspects also need to be examined very, very carefully by the auditor, that the branch may not be sitting on those particular ineligible or block credits in their input tax credit. 50% reversal will not be available to 17.5, meaning thereby by reversing 50%, you cannot make that 50% available to the branch. More particularly, one more aspect which we have to understand, that these particular records are all electronic today. So auditor might be going to a particular branch and he might get an answer that all our records are maintained centrally at the regional or head office. Friends, this answer will not help any of the auditor. They need to see the records of all the GST compliances, including ITC, output, reverse charge. Three things are there in GST on which demand can be raised: outward supply, a reverse charge mechanism, and the third one is your input tax credit, barring the refund. Refund is a different topic. So these three items are demand can be created by a GST department. The auditor need to have the access when he's auditing to all the records which are relevant from these particular perspective, including your output registers, your ITC registers, your movement of goods. So if there are goods which are being maintained at the branch, you need to, and also please also take note, there may be goods which are being kept as a custodian by certain branches. Those particular goods will not fall within the purview of your GST records. But if your goods of the branch are being warehoused somewhere else, you need to have a complete access record. And also, in my humble opinion, when the warehousing of the goods is being done at a different location, the different location would need a different GSTN. It cannot be under the same GSTN. So these things, please do take care. Sushil sir.
Yes, sir. Umesh ji, you want to add here something regarding documentation? Because
No,
people
sir.
have complained that banks are not issuing invoices, they are not giving documents, and how to take credit. Only we are dependent on the GSTR1 whenever the entry is getting reflected in our GSTR 2A, we are taking credit. So what exactly the requirement for this GST for issue of documents, if you can elaborate on this? In
Sir,
the meantime, yeah, over to Umesh ji, please.
Yeah. Frankly speaking, sir, in the banking industry, they scan everything and they put it into the Finacle, and the document is available only with the specific rights given to the users. So many times the branches or the persons with whom the auditee is sitting and or having a discussion of audit, they may not be able to provide, but yes, definitely they can provide the details from the system which are available to them. And as regard the GST Act, the sections are very clear. They need to maintain the documents. If they take ITC, they have to produce the invoices. If there is a taxable supply, they have to produce the value of supply and all the corresponding details. So in banking industry, a branch auditor may not be, or they may be facing some issue, but banks have all sets of documents, though it may be in electronic form.
Thank you, Umeshji. Now, next question. Few of the viewer, Gauravji, I was telling, few of the persons, they are saying the GSTR 7 could not be filed unless you have the GSTN of the recipient of supply. So deduction may be done as per the section or the rules if we understand that, but practically you cannot pay the money to the government by filing GSTR 7. So none of the persons now deducting TDS on unregistered persons. So due to the reason it is not allowed by the GSTN.
That is why I mentioned Rule 66 very categorically, sir.
Hmm.
So while that particular facility has a gap vis-a-vis the provisions, but in any case, the provisions will prevail over the GSTN. So we all know there are three masters of GST today. The GST law, that is one. Number two, GSTN, and number three, the way it is implemented at the ground level. So three difference, there can be scenarios. And that is why I said very specifically, Rule 66 will definitely come as an answer from many of the listeners that due to this particular problem, it has to be read cohesively and TDS may not be deducted. But please understand, the idea of TDS deduction is not to give the benefit to a registered person. The idea of TDS is always to capture those particular people who are having a receipt more than 20 lakhs and they are not following the GST law. All those who are already following the GST law, they are registered. Their TDS is not the question. TDS has always been a modus or a mechanism to capture uncompliant assessees. So we keep it open, sir, in my humble opinion.
Correctly, that's why I've taken this point for discussion, because number of viewers are thinking that since they cannot file the GSTR 7 without the GSTN, but the basic purpose of TDS is getting defeated. It is the mistake of the GSTN who has made this form and not kept the provision for unregistered persons. But otherwise, as Gaurav sir has mentioned and Umesh sir must be concur with this, TDS provisions are made to capture transactions which are might be escaped of the eyes of the officers. That's why this TDS provision has been made. It is not a just to collect tax and the benefit will be given to a registered person. Whenever the TDS was implemented, it is implemented to bring the transaction on record, to have the officer access of the some of the informations about the person who is not paying the tax or who want to escape the turnovers. For that purpose, only TDS provisions are made, but somehow it is not implemented in the way the intention of the law was. So that's why it is presently not getting deducted. Otherwise, as per law, I am fully with the Gaurav sir and Umesh sir. We three are of the same view that law requires deduction of TDS and it is 1%. All have no doubt on this. Now I am coming to Umesh sir. Umesh Sharma ji, in banks, you must have noticed that the location of the recipient of supply is really very difficult to identify, because a person may be having a bank account open in Delhi. Now he is getting services of number of branches in the country. Suppose one person who has opened a bank account in Delhi, now after a few months he opened a branch in Calcutta and he is operating from the same bank account which is registered in Delhi, or the address of the client in the bank's record is Delhi. So the place of supply, how it works in the GST, how the bank should determine and how they should charge IGST or CGST, SGST, keeping in mind the difficulties faced by the banks and what are the provisions to take care these difficulties for the place of supplies. Over to Umesh.
Yes, sir. This place of supply is a very typical issue for the banking industry, but the solution lies in a very simple way. That is the KYC. When we refer to the Section 12 of IGST Act, the place of supply of services, where the location of supplier and the recipient is in India, there is a special explanation given that the place of supply of banking and other financial services, including stock broking services, to any person, the word here is to any person, shall be the location of the recipient of the services on the record of the supplier of services. So here, if somebody is there, say X, who is residing in Calcutta, he has given the address to the bank, KYC is given. In Calcutta, the branch opened the account of that person because that is the record of the person available with the supplier. So now the Calcutta is the location of that person and the branch has opened the account. Now the person has shifted to Delhi for say salary purpose, and from last 3 years he is there. But the record of the recipient with the supplier to the banker, it will be Calcutta because that is the record. If the person changes the KYC, shifts its address from Calcutta to Delhi with the same say SBI, then the Delhi branch where the KYC has been done, the record has been changed, then the location will be shifted. So the place of supply will depend upon the location of the recipient on the basis of record available of that recipient with the supplier. So in bank, this is most important issue. Now you have seen that RBI is charging lot of penalty for non-compliance of KYC. Many NBFCs have been charged for non-compliance of KYC because if the proper address is not captured in the system of the bank, then complete system fails. And for that GST, the place of supply provisions are also in trouble. So this is very important that what is the address available in the record of the supplier. And if there is no record available with the supplier, means the services are given to non-account holder. Many times banks give services to the non-account holder. Then the place of supply shall be the location of the supplier of the services. So from which branch the services are given, say to the recipient whose record is not available with the supplier. So non-account holder. So one has to be very clear from account holder and non-account holder. So the address of the account holder with the bank is very important. Then section 13 is there. Section 13 of IGST Act, place of supply of services, where the location of the supplier or location of recipient is outside India. Now here we are going for the foreign branches. Say Dubai branch is there and Delhi branch is also there. Some account holders are in Dubai and they are getting services in India, or Indian providing services to Dubai. The place of supply for following services shall be the location of the supplier of services. This is very important. Section 8 is there. Services supplied by a banking company or a financial institution or a non-banking financial company to account holders. So in case of an account holder, in case of the recipient is outside India, then the place of supply shall be the location of supplier of services. So the Indian branch or the Indian bank who is providing services to the account holder who is residing in Dubai, the place of supply will be the India, because the Indian branch is providing the services. So these are the two important aspects which need to be taken up, because whenever we find that the place of supply is the matter, because in banking each and every state wants revenue. So what the state will do, whatever services are provided by the banks to the account holder, to the person whose address on record is of that state, then CGST and GST will be levied if the supplier, the banker, and the location of the recipient are in the same state. If they are in the different state, then it will be IGST. So the Finacle software takes care of this. So that's why KYC is important, and one has to look into that aspect from banking aspect, that is place of supply, the address on record of the account holder. Over to you, Sushil sir.
Thank you, Umeshji. Gaurabji, you want to say something? It is always a controversial issue, how to find location, and Umeshji has elaborated on this. You want to add something there?
No, sir. I think this is a very complicated issue, and more in terms of the CBS which we discussed. So, Umesh sir, I think nothing more to add, sir.
So, okay, now little bit related to this topic only. Gaurav sir, I want to raise a query. Sometimes banks use third-party ATMs and customer service points or third-party warehouses where goods are stored by the banks. As per the guideline of the RBI, whether banks are required to include these third-party places also in their application for registration, that is as an additional place of business, or how to handle this type of transactions if for as keeping in mind the GST implications.
Sir, these particular locations are usually not the location which are from where the banks are providing services. Yes, for a very limited purpose of giving access to the cash withdrawal and maybe cash deposit and maybe certain other services which can be handled through an ATM machine. If we speak very categorically, it will be considered as a place of business, because you, even though the banking branch is not there, but the services extended by the banking branch are there. However, we are fortunate that government came out as a respite in this particular aspect, and they have clarified that no registration is required in these particular cases where the ATMs or the third party services are located. These will be only seen as a point of sale machines. And since these particular locations are not the locations in terms of the branches, the separate registrations are not being called by the government in these particular cases. So one may refer to the banking FAQs, more particularly maybe question number 15 or maybe question number 1, where categorically it has been mentioned by government that banks are not required to provide the details of ATMs in their registration certificate. But if I have to again answer that, sir, technically it should be a place, because you have a good there, you have a location, and today the kind of technology which we are using, ATMs are themselves a full-fledged service unit, and they can perform all the function for many of the small customers which a counter in a bank may be doing, including updating the passbooks. Sir.
Thank you, Gauravji. These are the issues which not coming to all the auditors, but in number of audit, definitely they are going to see these are the issues. Umeshji, if some banks are taking over the loans from other banks, one person has borrowed money from X bank, now Y bank is taken over this loan. Is GST perspective whether something to be checked there, or you want to guide something? What will be the impact of GST when this loans are taken over by one bank by another bank?
Sir, in that scenario, when the loans are taken over by one bank from the another bank, what is the underlying asset? The underlying asset is the loan, and it is a form of money because goods definition section 2 subsection 52, which says that goods means every kind of movable property other than money and securities, but include actionable claim, growing crop, etc. And when we look into the money definition, section 2 subsection 75, money means the legal tender or a foreign currency, check, promissory note, bill of exchange, letter of credit, draft, pay order, traveler check, money order, postal, electronic remittances, or any other instrument recognized by RBI when used as a consideration to settle obligation with Indian legal tender or another denomination, but shall not include any currency that is held to be the domestic value. Now, when the loans are transferred from one bank to another, they have clarified that services including facilitating or arranging transaction in securities is taxable, but per se the loan amount which is in the form of money, that loan will not be a value of supply, it will not be taxable, but the charges for the takeover of the loan accounts, that will be taxable.
Good, sir.
Sushil
Yes,
sir.
thanks for elaborating the topic in detail. Now I am posting a queries to both of you. One of our viewer from Patna want to know this. Since this compliances like deduction of TDS or deduction of GST or the collection of GST and payment, all these are centralized. Whenever we go to bank branch, they simply say this is taken care by head office. We have nothing to do. Then what will be the responsibility of the auditor? What precaution he should take? If you can guide, like I have seen in one of the audit, the bank simply say all these are complied at Delhi office. We are not aware about this. Then I simply ask the question, this particular gentleman, whether you are keeping record of the block credit separately or not. How these block credits are getting reported to the head office, or you are simply sending the figure that this much credit accrued to me, you take. So, what are your guidance, Gauravji first, then Umeshji? This type of grounds usually head office branches are taking that since the compliance are head office, we are not worried, we are not taking care of this. What audit precaution the auditor should take in this type of cases?
So if registration has been obtained separately, in very simple terms, the head office has either under the compulsion under Section 8 of IGST, when it is a different state, the establishments will be deemed to be different establishment. They are supposed to take a separate registration and maintain their own individual records. They cannot divorce away with the maintenance liabilities, but they still retain a registration. That is not possible. Every registered person. So that is the language which Section 35 says. Now, once you are a registered person, you are supposed to maintain your own records. In case of multi-unit registration, when there are many branches or many locations under a single registration, the PPOB, the principal place of business, is supposed to maintain the records for all the locations. But the respective locations are supposed to maintain the records for their own respective unit. So they will not be maintaining it for the other units, but for their own unit. They need to maintain proper records of all the input services, outward supply, all supplies received, given, all assets located in their under their balance sheet or under their financials. All transactions need to be properly maintained along with the underlying documents, which may include the proper invoices, which may include the proper vouchers. The liability cannot be shrugged by merely saying that that particular thing is being maintained centrally, maybe at regional or head office level, sir. In my humble opinion, the insistence should be very clear from the auditor that when the liability for the maintenance in terms of financial records is in your books, the records need to be maintained by you. I need to see those vouchers. I don't know. Leave aside the GST. If you are not looking at a particular voucher, how can you vouch a particular branch? So if an invoice is not being maintained by the branch, that particular ITC may not be available or may be available. But more important is, how can an auditor audit a branch without looking at the records? So please do look into it. Yes, there will be one single problem, that the return which is being filed by the GSTN, which is having multiple location, is at PPOB. So two set of auditors are there. Number one, the branch auditor, which is one of the units in that particular multi GSTN, and the other will be the regional or zonal office, which will be the PPOB, principal place of business. So the branch auditor need to look into, examine what is the reporting mechanism of that branch in the GST format or performa or monthly compliances MIS of that particular zonal unit. And the zonal auditor need to examine what is being taken as an input from the branches by that particular unit and how is it being considered for the purpose of the compliances. So both the auditors, if they work independently but towards a common objective to look into how the system is working, I think this problem can be answered by both the auditors.
Thank you, Gauravji. Numeshji, you want your views on this? Queries?
No, it's okay, sir. Gaurav sir has taken up.
Thank you.
But even if we all will say, I think there will be hundreds of auditors who will be having very innovative ways to address this particular issue in their own manner. And we respect our fraternity brothers. They might be addressing this particular question better than anyone of us. So audit is a different platform, sir. GST definitely has its own limitation in terms of audit.
Thank you, Gauravji. Umeshji, sometimes we get charges deducted by bank, and these they say that is a foreign branch charges, and say we some remittance is coming and some deduction has been made on account of bank charges. So the person who is receiving the net money, he is not able to make out whether this will amount to import of services, because if the services are provided by foreign branch or the foreign bank and money has been deducted by the foreign bank or branch, then these services must be considered as import of services. Sometimes these charges are not deducted by the foreign branch or foreign units, but the Indian units are deducting the money. So how to clarify these situations? And if Indian units are deducting these charges, they should charge GST on the charges. Whether this, because they are not very much clear about the transaction nature of how much money has been deducted, on what account deducted. People has understood that there will be some deductions since money is coming from abroad, and calculation is not so clear all the time. So what precaution this auditor as well as the person who is using these banking services must take? Overview on the foreign remittance, whether it is amount to import of services.
Sir, this is a very what I can say, delicate issue. We have to split into two parts. First, whether any intermediary services are provided to the offshore client, and the services are provided by the banking company to its offshore account holder. Because here this is very important, whether the services are to the account holder. Say a transaction is happening between American bank and a German bank, but the services are taken for an account holder, and that account holder may be in India or may be an offshore account holder. That is also a very important point, and whether any intermediary services type transaction is coming or not. Because when we go to the IGST Act section 13 subsection 8 clause B, the place of supply in such services is the location of the service provider. As the location of the service provider, say if there is an account holder and the bank is providing the services and the bank is situated in India, then it will be the location of the supplier. Then it has to be taxed. Now, the first point which you have noted is that there are some foreign transactions happening, and the foreign bank is deducting or charging something to the bank. And if while remitting, they are remitting net, means $100 they want to remit, but they are remitting $98. This 2% is a charge or it is a foreign exchange fluctuation. That we have to take in point. Because if it is a foreign exchange fluctuation, then it is out of taxability under GST. But if it is a charge or it is a service or it is a fees collected by that foreign remitting bank, then it's definitely a import of services in India by the Indian branch, and it's an import of service, and for that uh, IGST will be levied. So according to me, sir, we have to split the transaction between the one bank to another bank, Indian bank to the account holder, and accordingly we have to judge the taxability on the foreign remittances. Yes, sir.
Gaurav, any precaution you want to guide, or the person who is collecting money from the bank must get a certificate from the bank? What is your suggestion? That whatever is deducted, on what account it is deducted? Because if Indian banks are deducting, they must be charging GST. If foreign bank branches are deducting, they will not charging GST. This will come under reverse charge. So, anything you want to say?
I think Umesh sir is very rightly and comprehensively covered this. In terms of foreign transactions, we all know it will be under reverse charge, and domestic transactions will be under forward charge. So we have to first of all make ourselves very clear as what rightly has been said by Umesh sir. Transactions between the branches and transaction between the P2C. So once we are clear, I think, and more importantly, there is one more set of transactions which has come very recently and very prominently, is in terms of bank guarantees which are being offered by the foreign banks outside India for issuance of a bank guarantee in India. So those particular transactions where there are reimbursements from the head office, which is providing the corporate guarantee to a bank outside India for issuance of a bank guarantee in India, those particular transactions also need to be examined very, very carefully and clearly by the auditors. So let us say HSBC Bank. So HSBC Bank, on the assurance of a corporate guarantee in China of one company, will be issuing a bank guarantee to in one of the projects to a Indian counterpart or maybe a project office of that particular company in India. So there is also a cross charge which is required between the HSBC India and HSBC Shanghai or whatever. So the basis of those particular guarantees need also to be examined by the auditor. So the points are so much. If we ask our auditors to only examine the GST aspects, I think the entire time what they have got for their audit, bank branch audit, will be short only in terms of complying with GST. So major points I think they should look into. But yes, very technical points if it comes to their knowledge, because what I gave you an example might not even come to the surface before the auditor. So suitable management representation in terms of that all such particular transactions are recorded, duly recorded in the financial statements should be taken from the branch.
Thank you, Gauravji. Umeshji, you want to say something, or I can move to the
No,
next query?
yeah, you can move to next, sir.
Thank you. Gauravji, one particular business transactions, banks are giving loans, and when it is not paid, repaid to the bank, they acquire the assets which is financed by them. They sometimes uh, take assets in their possession, and according to the policy of the bank, they dispose of these assets. So, how to record these transactions and what are the policies? GST provisions. How to, suppose bank is uh, taken over a vehicle, say a car has been taken over by the bank from the borrower since he was not paying the loan. So what will be the, whether the GST is applicable and what amount GST is applicable? Can't it be considered as a bank as a only auctioneer, because the asset doesn't belong to bank, but bank has a right to sell. The agency business, whether agency will come into in between, whether bank will consider as a agency for making these transactions, or they will be considered as a principal, because the assets is now under his possession, his right over the assets is acquired, and since he is selling the assets, the tax is payable on this. So over to Gauravji to take up this issue.
Sir, repossession of the asset, that is what it is commonly known as. It is happening when a lender he reclaims a property when the borrower has defaulted in their loan payment. So when the reclaim happens, it is not a supplier from the borrower to the lender. So that is the first part which we have to understand. So there is no principal agent relationship which arises between two of them. It is basically a claim in terms of owning the property. So it is not even a transfer of property, it is basically a reclaimed property by the bank from that particular borrower under the respective acts. So for example, the Sarfazi Act. So those particular properties are as a matter of right is being reclaimed and taken into their own possession by the bank. Now, having said that, the first thing which is very clear is that the repossession or reclaim is not being taken as an agent. It is taken as an owner, and as an owner, when you're disposing the asset, the liability to pay GST will definitely be on the bank. Many of the friends are of the view that if ITC is not taken, the GST is not applicable. That is a myth. There is no correlation of input tax credit and output tax. The bank which has reclaimed the property as the owner under a specific act will be liable to pay GST on the disposal as sale of that particular property, repossessed asset. It will have to issue a GST invoice, pay appropriate tax at the rate applicable on that particular asset. So that is, I think, all from my side.
Thank you, Gauravji. I think we came to end of this particular program. Uh, before I propose vote of thanks, since Vice Chairman is not available, I will, on behalf of the Vice Chairman, I will propose the vote of thanks. Before that, if Umeshji or Gauravji quickly want to add something or conclude this particular webinar, please, first I will ask Umeshji. And then I will ask Gauravji what will be your views. And all the participants, before you log out from this session, you please have a patience. And please do write to us what topic you want for the next webinar. And your feedback will definitely help us in organizing more and more such program. And your feedback in terms of the quality of the program is also invited. Over to Umesh.
Yes, sir. Thank you, sir. And it was a very good discussion. And when you are there as an umpire, we were very easy to play on this tricky pitch of banking, because it's a very typical subject, and every uh, time it comes in the month of April when there is a bank audit season. So all friends, whomsoever are doing bank audit, be very clear on your interpretation. And I will request to refer this book. I think this book is the very important book. I am referring this book because it's a recent publication from the Institute of Chartered Accountants of India, and this book is available on the website also. A compilation of GST in the banking sector. Thanks to Sushil sir, thanks to Rajendra sir for the publication, a timely publication of this book. So please refer this book and use it. And I thank all of you for your 2,500 plus participant joining here, and wish you all a happy bank audit season, happy financial year. Over to you, Sushil sir.
Thank you, Umesji. Now I request Gauravji to have his concluding words.
Sir, at the outset, as always, I thank you, the respected chairman of Indirect Tax Committee, for organizing these kinds of uh, knowledge sessions, which are very beneficial for both the speaker and the learners. I thank the respected vice chairman in absentia, the entire committee, my very learned co-speaker, sir, Umesh sir. It is always Umesh sir के साथ बैठने के बाद ना half of the tension goes with the smiling face we see. So half of the tension on any complicated topic also goes away. So Umesh sir, it is always a pleasure to be with you on any of these sessions. And yes, at the end, I am thankful to all the viewers who have taken out time to put in their queries to listen to this particular session. And I wish everyone a very good audit season in the forthcoming month of April. Thank you, sir.
Thank you, Gauravji and Umeshji both for taking out the time for this today's webinar, and definitely all the viewers must be benefited by this webinar, which is organized by GST and Indirect Tax Committee. We wish to organize such more seminars, more webinars through this seminar. One of the person wanted to know how many CP hours for this. We only say that 2 hours of learning. CP hours is or may be claimed in the form of unstructured 2 hours. So we are thankful to all the viewers. The last number which I got is 2,633. Good number, appreciable number, and in times to come, it will be popularized more. And requesting all the viewers, even if you are not doing bank audit, definitely this type of discussion going to help you in your other clients whenever they are having the banking services or impact of the banking transactions in their GST. Thank you. Thank you, the entire team of the GST and Indirect Tax Committee sitting at Delhi, organizing this webinar and reaching to all our members. Thank you, each one of you. Stay healthy, stay safe. Good night.
Thank you, sir.
Thank you, sir.